Welcome back. It's time for 3 Stock Lunch. Eric Clark is here to do the trades today. He's a portfolio manager at Accuvest Global Advisors. Eric, welcome to you. We've been talking a lot about Apple's charge to $4 trillion today. So what would you do with the stock here? You buy it? I don't think you'd want to short it, but what do you think?
No, I would not want to short Apple. I mean, it's the greatest consumer staple ever created. So we think it's a buy here, and certainly a buy on any dips that come. Where they're just beginning this AI refresh cycle, and it's not just the iPhone, it's across all the devices. So we think this is the first time they're going to have some pretty good multi-year revenue growth at a time when, yes, the stock's at all-time highs. Yes, it's 30 times earnings, but you would expect a great business that's a leader in a really important category to be, a little more expensive than the market, because they're a solid business with solid operating metrics, just beginning a multi-year growth cycle.
All right, next up we have Target. The stock is one of the best performing retailers today, but shares are still down almost 13% over the past 3 months. What do you do with that one?
Well, I think you can hold Target here if you own it. But inflation's been difficult for Target. They were the losers when Costco, Walmart, and Amazon were kind of the winners here. But, at 14 times earnings, they certainly need discretionary spending to come back a little bit more, because that's what they're more focused on. But I think you're getting paid, to wait at 14 times earnings, and they're finally getting their operating metrics and their margins back to where they used to be, lowering prices to drive traffic into the stores, and having operating efficiencies on the other side to keep margins high. So I think it's a pretty good long here.
A pretty good long for Target. That brings us to a little bit, I don't know if this is a tougher one, but Coinbase has been on a tear lately, up more than 50% over the past couple months, but it's super volatile as well on movements in Bitcoin, although it's only down 1.5% today as Bitcoin goes below 96,000. Below that mark. Eric, what do you do here with this one?
Well, I think it's a buy. It's 20% off the highs, which is great. We don't like to chase moving trains, so if this were at all-time highs, I think I probably would be a little more cautious. But 20% off, knowing that it's a long theme of investors, institutional and retail, starting to get more engaged with crypto, plus the stable coin opportunity with, multinationals all over the world being able to move money around the world more efficiently. I think that's a pretty interesting, this would be in our innovator brand category, because it's a younger company in a younger, new, evolving market. But I like the discount after a pretty strong run.
Is there anything you don't like, Eric?
Well, we don't like second-tier retailers. And when inflation stays high, you want to stay away from lower quality companies, companies that have too much leverage or that are just selling marginal products that don't have a lot of differentiation. So, that could be 2/3 of retail. So we're certainly staying up in quality and up in brand relevancy and avoiding the rest.